Massive global shortage. And it's getting so bad that General Motors, one of the world's largest automakers, said it could lose up to $2 billion because the semiconductor chip shortage forced it to temporarily shut down some auto manufacturing plants.
Welcome back, friends, for one more update from the world of high-growth EV stocks. In case you are new to this channel, please do consider subscribing. And in case you live in the United States, we would like to take this opportunity to mention that we have now partnered with Webull, and they are giving away 2 free stocks worth up to $1,850 in total when you make an initial deposit over $100. That's just a lot of free money, and we think you should definitely consider signing up for them. All you have to do to claim this free money is use the sign up link from the description of this video. Now let us get right into it. In a surprising new development, NIO today announced that the company has decided to temporarily suspend the vehicle production activity in their JAC NIO manufacturing plant in Hefei. The halt in production is due to a semiconductor shortage and will be for 5 working days starting from March 29th. We also learned that the overall supply constraint of semiconductors has impacted the company's production volume in March 2021. As a result, NIO now expects to deliver approximately 19,500 vehicles in the first quarter of 2021, which is lower than the previously released outlook of 20,000 to 20,500 vehicles. This has come as a shocking news to many investors. However, it is important to remember that NIO CEO Li Bin had already warned of some minor disruptions this year due to chip shortage, and what is even more important to note is that 19,500 vehicle deliveries in Q1 will still be an impressive quarter-on-quarter growth for NIO, as they had delivered 17,353 vehicles in the previous quarter. At the current rate, NIO should easily deliver close to 100,000 vehicles in 2021 even by a conservative estimate. And 100,000 vehicle deliveries in a year will be a major milestone for NIO as the company aspires to slowly grow into something as big as Tesla. Semiconductor chip shortages are not a problem unique to NIO, but they have been already affecting most automakers around the world. To understand the chip shortage problem better, we'll now take a look at a recent video on the topic by CNBC.
It's not an overstatement to say that semiconductors power the modern world. They're not only a key component of nearly every electronic device we buy and use, they also power the factories that make the electronic devices we buy and use. They power our laptops, our cell phones, our cars, our washing machines, our refrigerators, yeah, even our refrigerators. And this is just the stuff in our home. We're not even getting into all the ways semiconductors are important to the military and to the power grid.
If software is eating the world, then the chips are the teeth.
And now there aren't enough of them getting made, a massive global shortage. And it's getting so bad that General Motors, one of the world's largest automakers, said it could lose up to $2 billion because the semiconductor chip shortage forced it to temporarily shut down some auto manufacturing plants. President Joe Biden just ordered economic and national security experts to look for gaps in the semiconductor supply chain in the United States. They want to see how reliant the US has become on other countries to manufacture semiconductors. Here's how the global chip shortage got so bad and what's being done to fix it. So what are semiconductors?
It's silicon with transistors built into it. And these circuits are put into basically any product these days that needs power. Generally, every single electronic product these days has these chips in them that allow them to do what they do.
When people talk about semiconductors now, they're talking about the advanced microchips that power smartphones, computers and cars, and advanced medical equipment, and the analog semiconductor devices that power radios and thermostats. The transistor, a kind of semiconductor, was first successfully demonstrated in 1947 at Bell Labs in New Jersey. Its inventors won the Nobel Prize for Physics, created the first tech companies in Silicon Valley, and basically laid the foundation for the modern digital world. After the transistor came the integrated circuit, the microprocessor, etc., until the super small, super advanced chips we have today. Now, the semiconductor industry is massive. Within the industry, there are semiconductor companies that design the chips, called fabless companies, and there are companies that manufacture them, called foundries. There are also integrated device manufacturers, like Intel, that both design and manufacture chips. More and more, though, major semiconductor companies are adopting the fabless model and contracting out orders to foundries like Taiwan Semiconductor or Samsung. And that trend toward fabless has helped complicate the chip shortage we've all been hearing about. The U.S. chip industry has captured 47% of the global market share in sales, but only 12% in chip manufacturing, according to the Semiconductor Industry Association. So how did this all start? Well, COVID-19. The coronavirus pandemic forced people to work from home, to go to school from home, to just basically do everything from home. People upgraded their computers, they got smart speakers, tricked out their home theaters, and played a lot of video games. Businesses scrambled to set up remote work systems and needed more cloud infrastructure.
So what became very clear is that electronics companies, there was a supply chain disruption. But once that kind of started working its way through in the summer and China started getting back to work, electronics companies knew that they needed to increase production by a lot.
There's no sign that the demand is slowing for semiconductors. Global semiconductor sales totaled $439 billion in 2020, and that's an increase of 6.5% compared to the 2019 total of $412.3 billion, according to the Semiconductor Industry Association. Global sales for the month of December 2020 were $39.2 billion, an increase of 8.3% compared to the December 2019 total. Another big reason for the shortage? Cars are getting more advanced, and they need more semiconductors. In fact, right now, it's the auto industry that's feeling the squeeze in computer chips most acutely. Cars not only need advanced chips to run increasingly complicated in-vehicle computer systems, they also need older, less advanced semiconductors for things like power steering.
The auto shortages are happening because the auto OEMs canceled all their orders in the midst of COVID last year, and it just takes the supply chains a while to adjust. We've had some whipsaws. So that would be happening anyways. It's not really the semi guys' fault, it's the auto supply chain. But to the extent that the shortages themselves are sort of focusing attention and jump-starting the debate on what we should be doing in terms of semiconductor manufacturing in the US, I think that actually is where the discussion can be useful.
Analysts expect the chip shortage to persist well into 2021.
We're in a real difficult situation. Of course, we've heard from the likes of AMD's like Lisa Su and others about the expectation of this lasting about 6 months. So 100 days, if her interpretation is right, is going to put us nearly all the way out, well over halfway into that 6-month period. And I really do wonder, are we able to shorten this delay at all with any action that could be taken right now? I think the Biden administration really needs to focus on how do we not allow this to happen again.
Semiconductors have been so essential to nearly every single industry, the chip shortage has forced the White House to take steps to shore up the chip supply chain in the United States.
We need to stop playing catch up after the supply chain crisis hit. We need to prevent the supply chain crisis from hitting in the first place. And in some cases, building resilience will mean increasing our production of certain types of elements here at home. In others, will mean working more closely with our trusted friends and partners, nations that share our values so that our supply chains can't be used against us as leverage.